Was a huge month for chip stocks. The iShares Semiconductor ETF was up 40%. It rose every day in April except for 2 days this week. The worst stock in the group, ASML, still up 10%. The best stock was Intel, up 100%, finally surpassing its dot-com era highs. Credo, Astera, AMD also big gainers in April. Atlassian shares jumping in the after-hour session after the software company reported revenue of $1.8 billion. That's above street estimates of $1.7 billion. EPS also a beat. The company raised its revenue growth guidance in cloud and data center growth, both above estimates. Joining us now exclusively for his first comments before the call, Atlassian co-founder and CEO Mike Cannon-Brookes. Mike, great to have you with us. Thanks for joining us before the call.
Thanks for having me, guys.
Do you think that the concerns about the SaaSpocalypse will be put to rest with this earnings report?
Well, look, I can't speak to the broader market concerns. I can tell you from Atlassian's point of view, we had an outstanding quarter as customers continue to increasingly move their business to the Atlassian platform in ever greater numbers, right? You can see that in the total revenues of $1.8 billion, up 32% year on year. Cloud revenue up 29% year on year to over $1.1 billion. And this quarter, we focused on the service collection, one of our businesses internally, because it passed $1 billion in ARR and keeps growing north of 30% year on year, alongside one of our biggest quarters ever for competitive wins. So I can't talk to broader market concerns. I can talk to our business and the incredible strength we had this quarter, which is a credit to everybody on the team around the world.
What has been the uptake in the quarter of Rovo, the AI offering? I'm just curious how consumers are digesting this, and if there's increased demand and increased usage of it.
Fantastically, yes. Look, Rovo is now used by more than 75% of Fortune 500 companies. Rovo being Atlassian's AI platform and offering and collective of services. We passed tens of millions of Rovo actions in a single month, and it's really starting to show up in our results. Not only are customers increasingly using Rovo to power their workflows and their business processes across many, many different types of teams, from HR to finance to technology to marketing, but it's also showing up in results and in customer voting. The teamwork graph, the context that Atlassian has about someone's business, their processes, their workflows, allows them to do incredible things with AI that they just can't do anywhere else, to get higher quality answers and to get cheaper answers fundamentally, whatever AI tool they're using. And you can see that because Rovo customers are expanding their use of Atlassian. Rovo customers grew their ARR at more than twice the rate of non-Rovo customers. And our AI credit usage is growing at about 20% month on month. So just a fantastic story for the software, the technology that we built, delivering business results for our customers and starting to show up in our business results every quarter.
And I wanted to home in on the notion of usage-based pricing. For a long time, this industry was strictly, in general, seat-based pricing, which was sort of the big concern driving the SaaSpocalypse that gripped your industry and maybe is currently gripping your industry, Mike. But you and some others are moving to usage-based pricing, and I'm wondering how that is rolling out and how customers are responding to that, and what sorts of changes you're seeing in terms of how customers perceive what they're getting out of the product with usage-based versus seat-based.
Look, I think the fundamental model for most workflow-based SaaS applications will continue to be seat-based, right? Mm-hmm. That is us being customer-led. The vast majority of our licensing revenue is there. It's the same thing I would say with storage or with networking costs. Like, there's a lot of costs that we bear that are consumptive, and we include in a singular offering. There are increasing customer demand and sets of services that are usage-based alongside it. So I think the end answer will be a blend of both. How much is included in your default seat-based usage pricing and how much is included in a consumptive element on the end. Again, Atlassian offers both, and we do so in a number of different ways. The Teamwork Collection, which is our flagship offering of the entire Atlassian workflow platform, those customers get significantly increased AI Rovo credits in that offering in their seat-based. And indeed, their Teamwork Collection customers are using more than twice as many Rovo credits per paid user as non-Teamwork Collection users, and they're running twice as many agents. So I think we're going to evolve through the pricing mechanics and different offerings. But in general, customers are seeing incredible value from our Rovo platform.
And I just wanted to get at some of the concerns that have been gripping your industry specifically and see what your perception of those concerns are now that we are at this stage of AI adoption. I mean, in terms of the concern that AI agents would replace some software workflow or that the usage of AI would reduce workforces and therefore seats. Have you seen any of that play out?
We aren't seeing any of that play out in our numbers. We've said this every quarter. We had another great quarter for seat expansion. One of the things that drove the beat was our cross-sell, so customers buying multiple products. And secondly, our expansion rates, customers moving from 1,000 seats to 1,200 seats, increasing their usage of the Atlassian platform. I can say for us, we have incredible potential within our customers still today. Again, 75% of the Fortune 85%, sorry, of the Fortune 500 use Atlassian's products, but they represent less than 10% of our revenue. And so we have huge expansion potential in our customers, and that continue to show up in our numbers. We're seeing jobs numbers be continually strong in the areas that people have worried about. So I'm not sure those fears are going to play out. They're certainly not playing out in Atlassian's numbers in terms of how our customers continue to expand their use of our software as a strategic partner to their business.